The FHA loan, you're not going to have the same inspection you would if you had a conventional loan. A lot of the clients that kind of give you a little bit run for your money, there's one thing that I find in common between all of them.
Yeah.
They're all still good people, but they just give you a little bit more run for your money, okay? To help you negotiate the deals. I help the opportunity get to where it needs to go, okay? But I'm not an attorney, so I cannot give you legal advice. Like, I can tell you legally what you can and what you can't do based on the law, but I'm not an attorney, so I'm not.
I mean, I'll get people, for instance, I have a client right now that's approved and she's using down payment assistance to buy a manufactured home, like a double wide.
Yeah.
So in order to buy a double wide with down payment assistance, it has to be brand new, never occupied.
Yes.
So I've texted her this.
Speaking of paint chips,
Yeah.
man, that loan.
Oh, that was fun.
Man, wow. While I was trying to go on vacation and while the seller was trying, man, let's talk about that.
Yeah.
Welcome back into Living Inside the Triad, and today I'll be chatting with no other, the man, the myth, the legend himself. And we've done quite a bit of business together. He has helped me understand a lot of things when it comes to financing, helping people get pre-approved, coming up with specific plans to make sure people align themselves to make sure they're financially good when purchasing a home. My man Clay Holk, how you doing?
Good. Excited to be here, man.
Good,
Appreciate
good, man.
it.
Good, man. Good, man. So, Clay, tell me, man, where are you originally from?
I'm actually originally from Memphis, but I moved here when I was 5. So basically I've been in the Charlotte area for, 25 years now? 26 years?
Wow.
Long time. Watched this place basically grow from farmland where we are now to what it is. So it's pretty wild. Yeah.
Now, I know you didn't come here and specifically got into the mortgage industry.
No.
But what was your introduction into adulthood? What was that career path?
So I used to be a butcher. I cut meat.
Okay.
So okay. I did that for probably, 8 years or so. I lived in Colorado for a little bit, worked at the Broadmoor Resort out there, came back here, and then I decided about 5 years ago or so that I'd always been interested in real estate. I actually tried to get my real estate license when I was younger and then realized that I couldn't go 100% commission because it just wasn't feasible for me at the time.
Yes.
But it was like 2020, once COVID happened, I was just working so much. I couldn't get any time off, and I was basically like, all right, I got to do something here. So I just decided to transition, get my NMLS license, and I started working in a call center for about a year.
Okay.
And then left that and came over to do the whole self-source thing. So,
really?
Yeah, it's been an adventure. But,
so that's how you got into the mortgage?
Yeah, just being in a call center, and then my leads dried up. I was just calls, people calling all day, and then all of a sudden my phone's not ringing, and I'm like, I need to make money, and there's no one calling in here. So my dad had been in sales his whole life, and he was like, hey man, listen, you don't need to rely on anybody to give you business. You got to build your own business, go out and create this for yourself. So that's what I decided to do. Yes. And I haven't looked back since.
So you transitioned from a call center into the mortgage industry. Now, did you feel comfortable with that change? Because you had to basically learn, that's a lot of information. Loans, it's a lot.
It's a lot. So the call center that I was at, honestly, was great. We had really good training. So I learned a ton. And then just from being in a call center, I was working, 4 to 5 loans in a day. So I saw tons of different scenarios. So I'd say the best thing, honestly, was working at the call center, because I saw more loans in that 12 months than I've probably seen in 5 years, just because of the sheer amount of volume that was coming through there. And the training that we got too was amazing, like guidelines. I mean, it's ever changing. So, I still have to read up on stuff, and I'm constantly learning, but it was a great foundation for me. And then after I was there for 12 months, I was just like, I feel like I have the skills that I need to go somewhere else and do this on my own.
Yes.
So that was the big thing. It was really hard. It wasn't easy.
Yeah, yeah, no, for sure. Any job that deals directly with customers and is financially, you're dealing with finances
It's fun though.
Yeah.
I mean, a lot of it's just problem solving. So it's really just trying to figure out what the client needs and how to help them in their situation.
Yes. So fast forward. Now I won't announce the name, by the way. Now we are handing out loans, giving out people pre-approvals. How does this position in dealing with people's American dream, how does that make you feel?
Honestly, it's really rewarding. Like, I love helping people. My mom's a social worker, so I think it's just kind of like engraved in me. But I mean, my biggest thing is like when I get to help somebody, whether it's buying a house or even like I have a client right now that's doing a refinance, a past client of mine. She called me and she's like, hey, I need new siding. I need a new roof. I've got a bunch of credit card debt. I need to pay my car off. And I'm like, all right, let's look at your situation and, see what we can do here. So we're paying off all of her credit cards, paying her car off. I'm getting her $22,000 for new siding and a new roof, plus another $8,000 just to keep in a savings. And she's dropping by $72 monthly output. So she's able to pay all this stuff off and then still save $72 a month. Like stuff like that just makes me feel really good. I enjoy helping
really rewarding.
people. It is. Like, and then helping people get into a house too. Like everybody's situation is different. First time home buyers, it's awesome to help them get into homes. Sometimes it's a move up client that just needs to like downsize and they need a bigger house. I mean, work with investors too. Like everybody's situation is different, but it's same end goal for the most part, which is good.
Getting across the finish line.
Oh yeah. Just get them in the house. Just everybody's got a different goal, so I just try to figure out what they're trying to do and base it around that to accomplish what they need.
Right. Now, with your company, what type of loans do you guys offer?
Basically everything. So we've got your traditional like FHA, USDA, VA conventional loans, and then we also have a whole specialty department that has just niche products for investors. So we've got products that don't rely on any income verification for investors to buy homes, like a DSCR loan. I've worked with a ton of self-employed borrowers too. So like we've got 12-month bank statement loans, 24-month bank statement loans. So these will essentially allow people that write off a ton of their taxes to still be able to purchase a home.
Homes. Right.
So it's just creative ways to get people into homes. But the most popular ones that we use are going to be like your traditional loans, the bank statement, home equity lines of credit, which is for someone that already owns a home. It's basically like a credit card on your house. And then the DSCR, which is going to be for the investors. We use those a ton. It's a really simple process. As long as the mortgage payment is at or less than whatever the market rent is, they'll let you close.
Yeah, that's pretty good. That's pretty good.
Yeah.
So that's a lot of loans. Let's break some of these down. So your USDA loan, what would you use a USDA loan for? Yeah,
USDA is really kind of a niche program. You're going to need a 620 credit score. It's more for rural areas. So kind of out in the country. I do find them. It's just a map that the USDA has. So sometimes you will see stuff that is in a community. Like I've had a townhouse qualify for a USDA loan before. It just really depends on where the property line is going to fall. They do have a lot stricter debt to income requirements on it, so your purchase price might be a little lower if you're going to use a USDA as opposed to an FHA, but they do allow for a 0% down payment.
Gotcha.
So you don't have to come out of pocket for down payment.
That's
you will
good.
have closing costs. So that's the only thing.
Now your closing cost is what? Is it still like what 1% or so?
Yeah, generally, I mean, North Carolina standard, you're probably looking somewhere around $4,000 to $5,000 total between closing costs, prepaids, origination fees, like all in somewhere around there. Title work for the attorney and everything too. So
yeah. Now I know we do a lot of business, and we have quite a bit of clients who have a FHA loan.
Yes.
Let's talk a little bit about those requirements with meets the FHA. And the misconceptions of an FHA. Yeah, the
FHA honestly is probably the best loan for like a first-time home buyer. They are a lot more lenient on credit, a lot more lenient on income well, not really income requirements, but I guess the best way to put it is debt to income. So you can have a higher debt to income limit, so your purchase price could be a little bit higher in an FHA as opposed to using like a conventional or a USDA. They do require that you put 3.5% down as a down payment on it. but there are programs out there too that can help you if you need funds for this. So it's a great option for first-time buyers is the best way to put it. I would say anyone that's probably sub 680 credit is FHA loan is going to be your best option to get into a home.
Correct. Now, so I heard you say programs that help you put down your down payment. Is that something that you find for them, or is that something that they do? Because I spoke to quite a bit of people, and they say, well, yeah, I took a home buyer program class, and I'm just like, that's nice that you did that, but it's not necessarily needed at this very moment, because I think everything changes based on county,
they do
sometimes state-wise as well. But
yeah, those are weird. The down payment assistance programs, I mean, there's multiple options out there. The ones that we use, we'll actually find them for you. So we have North Carolina Housing Finance Agency. There's another one within Charlotte called House Charlotte, and then there's another one if you're looking in South Carolina, that's South Carolina Housing as well. But they'll all give you, North Carolina's got two programs. It'll give you 3% or $15,000 to use for down payment and closing costs. And then the House Charlotte one is specific to Charlotte city limits and Mecklenburg County, but they'll actually give you anywhere from $10,000 to $30,000.
Wow.
And you can combine those two as well. So you could potentially get up to $45,000 in down payment assistance.
Wow.
It's not free money.
Yeah, it comes with stipulations.
It has stipulations.
Yeah.
So the biggest thing I tell everyone is if you have your own funds, I probably would not advise using this, just because we all know rates are high right now.
Yes.
They have a 7-year recapture period. So basically what that means is 7 years, you have to keep this loan that you can't refinance it.
Right.
If you refinance it, they're going to want their $15,000 back.
Wow. So, now is that like it's an immediate lien, correct?
Yeah, it's a second lien that's attached to your property. So what that means is you're going to have the primary, the first mortgage, which is just going to be your monthly payment. The second one's going to be for whatever that down payment assistance amount is. And there's going to be no payment required on it. It's a 0% interest rate. It's deferred for 15 years, which means it's just stuck in that second position with no payment. If you end up keeping the house for 15 years, they will fully forgive the $15,000. If you sell it before year 15, depending on what year you sell it, you might owe a percentage of it back. You might owe the full percentage back.
Wow. So have you ever seen that before?
I've seen it where people have refinanced before the end of the year 7. Generally, it's like I've been able to just pay the $15K lien off out of the equity in their house when they do it. I haven't actually had anybody have to come out of pocket and like pay for it. But
there's ways around it.
There's ways. If you have enough equity in your house, you can just pay the $15K out of your equity and just get rid of the second. It's situational though. I mean, you're gonna have to look at it and say like, hey, how much am I saving? Is it worth it to give this $15K up to save $100 a month? Probably not. But if you're saving $500 or $600 a month, I mean, it's probably at that point it's probably worth it.
Correct.
So it just comes down to the client and the situation.
Yeah. Now, up to date with your FHA, have you ever ran across any stipulations that prevent an FHA like going? Because you have all these little paint chips in the grass, and in my mind, I'm like, all right, go ahead and go over there, go ahead and cover up, rake it. I think he went over there when it was dry, and he blowed it, right? And so I think he came back out. He didn't come back out immediately. He came back out like 2 or 3 days. So now I'm having to call the other agent and say, hey, listen, they're going to come out on this day, so we give it a rest. They come back out, and it's like, nah, it's not happening.
They got it done though.
Yeah. I tell you, and when I finally got back, because we eventually pushed it out like a week or so, so we were still within deadline time. But I came back and I even tried myself.
Really?
It was like, dude.
Yeah, they're bad.
This stuff is in the mud.
Yeah.
And what made it bad was there was like pebbles or rocks. So
and it was in the gravel.
Right.
Because I remember calling the appraiser and I was like, what do you want us to do pick all the gravel pieces up?
Yeah.
We can't do that.
Right. So it was a tough one, man, but that was a fun experience.
Yeah, it was. That's the biggest thing that I see is the paint chipping, honestly. That's the number one. And those are usually the only time you're going to see like a delay in your closing is like something that's completely outside of our control.
So I know you work with a broad market of people. A lot of people are in transition from different states.
Yeah.
What is some of the best advice you could give from people who's coming from state to state in regards to their loans?
That is a big one. The biggest thing is when you're moving from one state to another is really just going to be the income piece. So if I've a client right now, for instance, that's relocating from New York to South Carolina. She doesn't have a job lined up. She's trying to figure out where she qualifies. And I was like, hey, I can't really give you a pre-approval letter until I have an offer letter, or if I have a remote work letter from your job. If you work fully remote, it's fine.
It's fine, right.
Fine, really easy. But the main thing is you really need to have a job lined up so that way we know how much you're going to be making, because we're not going to qualify you based on your income in the current state you're living in.
So from my understanding, she's moving to buy a house.
She's selling a house up there and she's purchasing one down here, but she has no job lined up yet. So I was, the easiest way I usually do it is I'm like, hey, how much do you make now? Yes. And then I'll look at that and then I'm like, have you started looking at jobs down there? And if they tell me yes, I'm like, okay, was the pay pretty comparable to what you're making now, or is it going to be less? Granted, this lady's moved from New York, so it's less.
It's a lot less.
Yeah, so she's like, I'm going to be making somewhere around 60. So I'm like, okay, based on 60, if you were to get a job for this is where you would qualify, just so I can kind of give her an idea of like where she can start looking. But the main thing is like I would never put anybody under contract until they have that, because that can all change. I mean, you could tell me you're making $60,000 and then you get a job and you're making 55 and say we might have really needed that $5,000.
Man, it's a big killer.
It is.
It's a big killer. Now, would you advise her to reinvest some of her profits to help that debt to income ratio?
Yeah, that's what she's wanting to do. So she's gonna take, I think she's only taking out $100,000 loan amount. So it's a pretty small loan amount for her. So she's basically taking all of her profit from the house up there and she's gonna put it down on this house down here, just to kind of keep her payment pretty low. But some people, I had someone right now that made like $80K and he just took the $80K and put it in his bank and put the minimum down on the other property.
Nice.
So
smart.
It really just depends on your situation, I guess.
Yeah. So it's very important to have a job at least lined up.
Yeah.
If you're gonna go across state to state.
At least start looking, have an idea of what you're gonna pay, or have a job lined up. The easiest way is remote work letter or new job with a salary. If we have a salary offer letter, we can just take a salary offer letter. We never need to see pay stubs or anything, and we can close your loan.
Right.
If it's an hourly position, that's where it gets a little trickier. We're generally going to need to see pay stubs before you can close.
Yes. Now, I know there's quite a bit of people with this 401k.
Oh, yeah.
And I've experienced it a little bit, but from your experience, how would you advise someone who wants to use money out of their retirement to make their first initial purchase?
I don't see it as a bad option, honestly. I mean, they'll let you pull from your 401k penalty free to buy a home. It's an investment. Honestly, if you look at how much your 401k is going to appreciate versus what a home appreciates, is probably
it's probably a no-brainer. Yeah, it's a no-brainer. It's a no-brainer.
But I mean, they'll let you use it. I've had clients use it in the past where they pulled from it. Another big one with 401ks is sometimes we just need cash reserves in your file just to strengthen the file. So I'll ask just if you have a 401k just so I can put it in there to make the file stronger. You generally won't have to use it sometimes unless you want to, but it just strengthens your file, makes it a stronger loan is the best way to put it when you have more assets in there after you close.
Right.
But they do allow you to pull from it penalty free. You would need to call whoever has your 401k and just ask them about the terms of withdrawal. But if you tell them, hey, I want to buy a house, I want to use my 401k, what do I need to do? They'll generally tell you all the steps that you have to go through. And then from there, you can kind of get an idea of, I think you might have to put it back within a certain time frame. I'm not 100% sure. I would talk to them, but they're all different.
Yeah,
but they don't penalize you if you pull from it for a 401k.
So is that
for closing costs or down payment?
So is that with a traditional IRA and a Roth IRA? Because
I don't think it would work with an IRA, just because that's like. Because of the tax benefit on it, you have to wait, and then I probably wouldn't pull from an IRA anyways because they split and double. But that's just my own thinking.
Yeah.
But I mean, you could always pull from it.
Yeah, it's probably not wise.
Yeah, because I mean, IRAs split and double every so many years. If you start pulling out of that, you're going to lose your compounding interest in it. So.
Well, I've had investors.
Really?
Investors would use some of their Roth IRA?
They probably have something the same as the 401k where it's like, hey, you can pull it as long as you put it back within this time frame. Yeah. Like I know they actually do, because I've had a client do that in the past. They gave him a certain time frame where he had to put the cash back in there. So he pulled it out and then put it back. It was just a flip. So it was an investor same way.
Right.
Yeah.
Right. Just borrowing against yourself.
Yeah, just borrowing against himself basically.
Right.
It's always a good option.
Right. Now, in those list of loans, I also heard you talk about the DSCR loan.
Yes.
What exactly is that loan?
So that's a debt service coverage ratio is what it's called.
Okay.
So essentially, it's just a loan for investment properties. You can't use it on a primary residence or a secondary. What it is they'll allow you to come in and purchase a home based on the property's cash flow. So we don't, like traditional mortgages, we're going to qualify the client. We're going to look at your income, your credit score, all that. All we're going to do with the DSCR is make sure that your credit is, I mean, we can go pretty low with these, depending on investor experience. I would say, rule of thumb, probably 640 plus credit score.
Okay.
As long as you have 640 plus, if you're a first time investor and 20% down, that's all that they're going to require for you to close on this loan, as long as the monthly payment on the rent schedule comes in. So what we're going to do is, with these, how we're going to determine the income is an appraiser is going to go out to the property and they're going to complete a rent schedule, which is like a form 10007. That's then going to tell us how much the market rent in the area is for this property.
Correct.
And then that's what they're going to determine the income as is going to be the rental.
Yes.
So as long as the easy numbers, let's say it rents for $1,000 and the payment's $999, they'll let you close on it.
Wow.
Even if it's $1 over, as long as it's like at or over, they'll let you close with 20% down. They actually will let you buy it too if it comes in less. They'll just require that you put 35% down. So
wow.
You
just gotta have a little money in the bank.
just gotta have a little more money.
A little money in the bank.
I mean, they'll do it. They're investment loans. So the best way to put it is the investors come in and they measure their risk, and then they determine if they will lend on it or not.
Right.
So they're really specific on the actual property and the where was I going? Really specific on the actual property and the client. That's the two things they look at: investment experience and the actual property.
Now, how long does it typically take to close that type of loan? Because it's an investment loan and there's a lot of risk management involved with that. So there's a lot of decision making.
Those generally take longer. We don't necessarily do those in-house is the best way to put it. Most of our other ones, like conventional, FHA, USDA, all those are done in-house. We close them in 21 days or sooner. Anything that's going to be these niche specialty products, we're then dealing with it in-house, plus we're dealing with another company. So it usually takes us anywhere from 45 to 60 days on those.
Wow.
So it's a little longer close on them, just because it does have to go through 2 to 3 different hands. And like I said, these are not traditional loans. They don't have traditional guidelines. So one thing comes up and then they could request 6 additional documents from you. So, I mean, a lot of it really too comes down to how fast the client gets us everything we need. If we're waiting a week on documents, we just lost a week
worth of time.
Yeah.
So what are some of those documents that people should have in place when they're ready to apply for a loan? What are some of those documents?
Yeah, the easiest ones would be driver's license, 2 months of bank statements. We need to see that you have funds to close, or we need to see that you need down payment assistance. Either one. W-2s, if you are a traditional employee, W-2 employee, 2 years worth of W-2s is what we're going to look at, not whole tax returns. And then most recent 30 days of pay stubs. Self-employed, a little bit different. Depending on how they're filed, we would either need 2 years of business and personal tax returns, or just 2 years of business tax returns. Just depending on how you have it set up. Or 2 years of personal or 2 years of business and personal.
Gotcha.
Those would be the main things, just to get a pre-approval out. And then once we have all those documents and a full application, it's, max 24 hours and less.
Wow.
Sometimes I might need additional information, one-off, if you're commission, if you make a bunch of overtime. There's specific scenarios where I'm going to need more information, but for the most part, it's 24 hours or sooner. W-2 borrower, if you make $60,000 a year credit, I could do it in an hour. It just depends on the client and their situation, how they're paid.
Now, if a potential client doesn't have funds to close, but let's just say they're going to borrow it from their parents or their cousins or for a friend of the family, let's say.
Can always do that.
Okay.
Yeah, we would just need a gift letter. So you can get a gift from a direct relative. You can get a gift from a friend. Sometimes it's just really hard. You're going to have to prove how long you've known them. And
a lot of verification.
Yeah, a lot of verification. Direct family member is the easiest way to go. I've even had clients in the past where, I mean, they've just were like, hey, I'm getting a $30,000 gift from my mom. And then we use that. It covers all their closing costs, covers all their down payment. We actually never need to see the funds either if you're getting a gift. We would just have whoever's giving the gift fill out a letter and wire those funds directly to the attorney for closing.
And they have to show confirmation that it came from one entity to the other.
Yeah. But we won't need bank statements for whoever's giving you the gift or anything like that.
Gotcha.
So it's pretty easy.
Gotcha. That's good. That's
and then grants too, like we were talking about, they've got those programs as well.
Yes.
I mean, if you apply and you need extra cash, so what I'm going to do is the first thing I'll look at is how much money you have, and then I'll start determining, what options we have here. Are we getting a gift? Do we need to use down payment assistance? Yeah. Could we use 401k, or do you just have money in your checking? So a few different options.
Yeah, and you know what? I'm gonna applaud you on that too, because I know when we do business, we look at the full scope of everything, right? Okay, how much money do you have? Okay, if you don't have the money, where's it gonna come from? So we're already simultaneously planning as we go into applying. So you're prepared for what you already have. You know what I mean? And even if a potential client is not approved, not a lot of lenders do this, but you will give them a plan that they can follow to help them get pre-approved, and it's free of cost.
Yeah, it's free. Yeah, I mean, I get people all the time. They're like, "Hey, I want to buy a house. I don't know what I need to do." Yeah. And I'm like, "All right, well, where are you?" Yeah. And then they're like, "Okay, here's my situation." And I'm like, "All right, you know what? Just fill out an application. Yeah. Give me your pay stubs. I'll see what it looks like. And then if you need a plan, say you want to purchase in 6 months or 12 months, whatever it is, I'll give you a plan to how much money you're going to need to save. Yeah. If we need to boost credit, like sometimes it's just as simple as like, hey, we need to boost their credit up. So I give them a credit repair plan. We just wait until they complete it. Once it's completed, we pull it right back in. And
go back, pull it up.
Ready to go. I mean, we had one that was like a year doing a credit repair that came back. Yeah. So I mean, there are people out there that want to buy houses. They don't know how to buy a house. And, I mean, I will help you if you need to.
and that's the most important thing. When they come to me and they say, "Oh, hey, Khalil, I want to purchase a home, and this is what I'm looking at. I want a $500,000 house, and I want this and want that." I'm like, well, "Okay, whoa, slow down for a second, okay? Where are you first in this process? All right, we think about what it looks like when we cross the finish line, but let's break it down. Let's start from the beginning. Where are we?" Right. And so we have this hard initial conversation right on back. And I think this is where I win a lot of people's trust. Yeah. Is because I'm actually having the responsible parent conversation with them. Right. And so boom, we have that conversation. It's like, okay, well, we don't know. We have an idea. We really need to figure out. Let me call Clay. Hey man, you got you got time on your hands? All right, I got a hot one coming in right now. And so boom, that's when I bridge the gap. And another thing that I like too is we get on a 3-way call. Oh yeah. And as I'm introducing the client who they are and what they may be facing, we open it up for all questions to be asked, and you take step by one. This is what this may look like. If you do this, then this is what this look like. You're able to answer all the questions in real time. Oh yeah. And I think that's a perfect thing. Not a lot of lenders do that. They like put in an application and I mail you a letter and a week later. Like I just lost a week's worth of time.
No, definitely.
And it creates anxiety.
Like we get an application though, like I could get an application if I haven't talked to the client and have no idea what their situation is. Like what am I going to do with the application? I need to know how to structure the deal. I need to know what the client's goals are, what they're trying to do. I mean, it's not my loan. Like I could set the loan up how I want to. It probably is not going to make sense to you. So my thing is like, what do you want to do? I'll set it up how you need it set up and present to you what you need to solve your problem. And that's the big thing. Like up front when we got on a call, like we already know like what issues they have or what might be the challenges, if there are any challenges. I mean, sometimes it's just as easy as like, hey, I want to apply and go put in an offer. But I mean, usually there's something. There's something.
There's always something.
Yeah.
There's always something.
But that's the big thing is really just, I mean, you got to make it personal towards what the client wants. And I mean, we both do, I feel like, a really good job at that, which is nice.
Yeah, absolutely. It's almost streamlined. There's a lot of things that I feel like we can do to make it like super quick. But for the most part, it actually is super quick. Yeah. It's pretty quick. Like, I don't have to wait weeks at a time to get you on the phone. No. Like, I can get you on the phone in a matter of minutes or an hour.
Yeah,
you know what I mean?
Like, back with what we were saying with once Khalil calls me and introduces me to a client, as soon as we hang up, he sets up a three-way text between everybody. So if you have any question, you can just send it back in there. If it's a real estate question, he can respond.
We're all right there.
I can respond.
One-stop shop.
Yeah, it's easy. It's nice.
That's everything.
And it builds the trust, too. I mean, you like to know that we're all on the same page and we're all working together here.
Yeah.
Like, it takes... I mean, all of us plus an attorney to do this, so we all got to be in a team.
Takes 30 days across the finish line. A little sooner too, depending upon your experience.
Sometimes.
Yes, it's depending on your experience. So that's good, man. So wanna go back to something real quick. So I know when I structure my deals for a lot of my buyer clients, I'm always gonna ask for seller concessions. Mm-hmm. So if there's a client who doesn't necessarily have the money, but they can receive assistance, and I combine it with seller concessions, does that still count as a down payment, or how does that? Okay.
Yes. So I've got a client right now that just put an offer yesterday, and she's getting $15,000 from the state. Plus, I told her real estate agent we needed $3,700 from the sellers, and she will get $80 back at closing. So she won't have to come to closing for anything. The grant from the state will cover down payment and closing costs, and then if there's anything left over after that, we can always try to negotiate from the sellers. You do a really good job about that. It's really nice too. I mean, and in this market, it's pretty common right now. It wasn't 2 years ago, but now it is.
Yeah,
so
for sure.
I don't know. It's nice too for the client. Like, you close on a house, you don't have to come and pay for anything. My friend Jindy just closed last week, and he got $1,300 back at closing.
That is such a beautiful thing.
Yeah, he used down payment assistance, and we got his concessions for everything else.
Yeah, and you know what I also tell clients too is, you know, that due diligence fee.
Yes.
That's credited back to you. So just because you already put money in a deal doesn't mean that it doesn't account for anything.
Exactly.
You know, and so helping them understand that closing disclosure, what that looks like, how does it equate, what numbers are, what that looks like, things of that nature.
And that due diligence and earnest money that you put down, like, that's basically just a deposit is what I tell clients. Like, it's going to be removed out. So whatever you're going to put down on there, you're going to get removed out. If there's extra cash left over, you can actually receive back whatever you put down in earnest money and due diligence. So my friend, for example, was able to get the $1,300 back because he put like $1,350 down as due diligence. So he got $50 less back. He spent $50 to buy a house, basically, which is pretty nice.
Right, that's really good. I never seen it. $50. $50. Let me ask you this: has there ever been a time where you had to utilize PMI?
Yeah, generally, if you don't have 20% equity, you're gonna have it on there. So if you don't have 20% down, you're basically gonna have mortgage insurance on your loan. Once you get to the 20% threshold, it will automatically drop off as long as you're current on your payments, or if you're not current on your payments, it'll drop off at 78% loan to value.
Got you.
But they can't keep it on there for the life. That's for conventional. FHA is a little bit different. They have something called MIP, which stays on the loan for the life of the loan, which basically means
MIP.
Yep. So it's like a mortgage insurance premium. So there's upfront MIP on an FHA loan too, which means there's a small portion of this which is financed into your loan amount at closing.
Right.
And then every month you're gonna have, somewhere depending on purchase price. So depending on what the purchase price and the loan amount is going to determine how much your insurance is going to cost for FHA. And that actually stays on there for the life of the loan. It will never go away. If you put 10% down, it will drop off at year 11, but that's the only way.
Got you.
With conventional, there's a couple ways around it. I mean, with mortgage insurance, like you can pay it monthly. You can pay it a whole split, like a whole premium. So you could basically pay like $4,000 and buy out all your mortgage
right.
insurance.
I was about to ask.
So there's multiple ways around it. I mean, like I've had someone where we had a debt to income issue. And they needed a conventional loan. And the easiest way to do it was we just swapped it to a split premium for the mortgage insurance. So they paid a portion at closing of it, and then we had a seller concession to cover basically a majority of all the rest. But it allowed us to get their debt to income low enough to where they could buy the house. So there's ways to get around it, kind of. I mean, you're still paying for it. It's significantly discounted when you do it at a single premium or a split premium. They have monthly premiums, but it has to, there's no way to get rid of it. If you don't have 20% equity, you have to have it.
Yeah. And that's pretty smooth, man. This shows us how important it is to have a team.
Yes.
Like, you know what I mean? Like, we have to work with the other side of the party just as much as they're willing to work with us.
Oh, yeah.
And don't get me wrong. If I'm representing the buyer, I'm trying to squeeze all the chicken. I'm trying to get everything that I can get for my client to come less out of pocket.
Oh, yeah.
But it really shows you how much of a team it plays an effect.
I mean, we always, like, if we have a client put in an offer, I'm like, hey, Khalil, here's what we need, here's what it looks like, here's the cash. So, like, we're both always on the same page, which is nice. That's what you need.
Yeah, no, for sure. For sure. Now, I know a really big thing in the mortgage industry is interest rates.
Yes.
Where are they at today?
They're like mid-6s, so they're coming down. They're not in the 8s anymore, which is nice.
Yeah.
But we haven't really seen much movement this year with interest rates. They kind of slightly went up and then came right back down to where they were at the beginning of the year.
Now let me ask you this. Because interest rates was slightly like around the 8s or so, when they announced that, well, simultaneously we see that they're dropping a little bit, did your business increase because of that?
More buyers, yes, definitely. But it's weird. They say for every half a point interest rates drop, you're going to get somewhere. I don't know the exact number offhand, but it's thousands of people that come back into the market.
Yeah.
So I mean, caveat, I tell everyone, if you can afford to buy the house and the payment makes sense, you can always refinance the loan.
Yes.
Once there's 100,000 more buyers in the market, the price is going to go up as supply and demand. So you're going to be paying, rates might be lower, yeah, but you're paying $100,000 or $80,000 more for this house now. Your payment's actually more expensive. Yeah. And you waited, so now you've lost out on the equity in there. So that's really what you got to look at is like, situational, is it the right time to buy or is it not? I can't tell you that, but you might know your situation. It might make sense. It might make sense to stay renting.
Yeah.
But there's one thing, houses do appreciate conservatively 4% year over year, and that's super conservative, especially in Charlotte. I think we're more at like 8 here.
Yeah. Oh my God.
So you're missing out on that if you're not buying just because you think the rates are high. We're probably never going to see 3% interest rates ever again either. So if you're waiting on that,
never.
You're going to need a lot to happen. We'll need like a pandemic, war. The best way to put it, rates come down when there's a ton of negative things happening.
Yeah.
So we need a lot of bad stuff to happen for the rates to come down. So that's the way to put it.
For sure. And I tell you what I experienced with interest rates. I know a lot of people get this mental fog because they're watching the little B-roll at the bottom of the news and the stocks and the interest rate. They're watching all of these numbers happen and move in real time. And what happens is they get this mental block and then they become afraid.
Yeah.
And then they just put a halt to everything and they just get back and start looking at everything. And what they don't realize that they're doing is they're slowing down their progression of actually stepping out on faith and just making the decision to purchase. Like, just take the leap of faith, because I tell people that interest rates are important, but the most important thing is being able to purchase a home that's financially affordable.
Yeah.
Right? So you don't have to go out and buy the sexiest house on the market. That's not the goal. The goal, if you don't have a house, the most important thing is to purchase a house, because purchasing that house now unlocks several other doors. So now, instead of you worried about, the interest rates, just take a home equity line of credit, and that going to come with an interest rate. But typically, your payments are a lot more smaller than what your regular mortgage payment is, and you can use that to either buy an investment, or you can use that to purchase another home and rent your other house out, and then possibly pay off both loans, right? Because now you're paying off your home equity, now you're paying off your first mortgage, right?
Some clients that have done it.
You know what I mean? And so that taking that jump is like very important.
Oh yeah. I mean, it's worth it just to talk to someone. I mean, even if you don't know, like, hey, can I afford it? Can I not afford it?
Yeah.
Just call, find out. It doesn't cost you anything.
It don't. It's free.
And the big thing too, like he was saying with affordability, I mean, that's really what I look at. Like, I try to get a really good idea of like what your situation is, how much can you afford, what do you want to pay, what's going to be too much money. Like, in all honesty, I don't really ever get asked what the interest rate is. Like, I don't sell interest rates. Like, I sell benefits to a home is the best way to put it. So like I'm going to figure out exactly what your situation is. I'm going to set the whole thing up like that. And if it doesn't make sense, like we'll probably have to go back and look at a different option. I mean, but at the end of the day, interest rates is a number. It is what it is. It's not going to change. We shop, multiple investors. If the payment makes sense, the payment makes sense. We're offering a free refinance, so you can always come back. We'll waive our origination fee. Yeah. But I mean, I wouldn't be scared just because you see a number that says like 6 or something. I mean, it's the cost of borrowing money, unfortunately. I mean, we can't borrow money for free.
No. And you know what else? Your interest rate on your credit card is probably high.
Yeah, the interest rate on credit cards is like 30%.
You might as well buy a house.
Yeah, when you start looking at things, it's not really that high.
Yeah.
Like, I mean, granted, 3 years ago, they were 2%, 3%, but that's an anomaly. If you look right before then, they were 4 to 5%. Like, this is historically where they have been at is somewhere within this range.
Yeah.
So, I mean, we will see them come down, and like everybody thinks that Federal Reserve cutting rates is like cutting interest rates. Like, Federal Reserve really doesn't have anything to do with our interest rates.
Yeah.
Our interest rates are based off like 10-year Treasury bonds, inflation, things like that. Like, if the Fed cuts the rate, that's good because that means that it's cheaper for money now, but that doesn't really lower our rates. And then we always anticipate these rate cuts already. So for instance, when they just cut it a quarter basis point, we are already baked into the market that they were going to cut it a quarter basis point. So if the Fed only cuts it a quarter, our rates are going to go up. They're not going to go down.
Right.
So we need them to actually cut it more. So if they were to cut it half a basis point, we would see our rates slightly go down.
Right.
But we're very loosely correlated to the Fed rate. So that's, if you're thinking interest rates are dropping just because of that, that's not what's happening, unfortunately.
Right. Correct. So let me ask you this. What is your craziest home buyer experience? The wildest thing you've ever seen happen?
I'd probably say I was helping a woman that was a teacher in Charlotte buy a house, and she was moving to like Kings Mountain area, which is probably about an hour from here.
Right.
And it was summertime, so she's not in school. She's a school teacher.
Yeah.
It's like,
so that's part-time.
Yeah, it's like July at this point.
Right.
I made it clear to everyone, don't go make big purchases. Do not quit your job. I mean, there's certain things that you can't do when you're buying a home.
Yeah.
Well, she just decides like 3 or 4 days before she was closing that she was going to quit her job because it was summer and it didn't matter because she wasn't working anyways. Well, as lenders, we do what's called a verbal verification of employment. We call your employer before you close to make sure you're still working there. She was not working there. And this lady sold her house in Charlotte, so she had no house. She sold her boyfriend's car because she had to get rid of the car to qualify for the house. She had 3 anacondas. Like this.
What?
Yeah, and so she had nowhere to put them because now she's homeless and she just quit her job and she couldn't buy the house. I mean, the whole thing fell apart because she quit her job like 3 days before closing.
Now, she didn't have no profits from the sale?
No, like not very much. No, it was like she She was a really unique situation. She had a bunch of debt that she had to pay off in order to qualify. So she was using basically all of her proceeds to pay off all her debt to buy this house. So the whole thing literally just fell apart and like crumbled. And I mean, I felt so bad for her, but like if you quit your job, I can't do any. I was like, please, like try to find a job today. Get a job. Give me an offer letter. Like get a job. Yeah. But she couldn't find a job. So that house ended up actually falling through. She lost, because you lose your earnest money in due diligence. I think she lost like $4,000 or $5,000.
Oh my gosh.
And then she had to go and then rent for like short term for like a month or something until she could find a job and another house. So, I mean, the whole thing was just a disaster, and it could have just been so easily avoided.
Yeah. So eventually she got a house.
Eventually she got a house, yes. But that one completely fell apart. And
all you had to do was just hold on to the job.
Yeah.
Three more days.
Yeah, that's the worst one I've seen.
Yeah.
I mean, there are some clients out there that are like, they're a little kooky. I've had some of those that call you like 5 times a day and want updates on every single thing. But like, that's just a personality thing.
Yeah. Correct. So going back to the school teacher, so jobs that simultaneously let out during the summer.
Yeah.
Right. This is a big one because there are a lot of school teachers.
Oh yeah.
Who want to purchase a home, but they don't understand that because they're not working for those 2 or 3 months. It
doesn't matter.
It doesn't.
Mm-mm. We know you don't work over the summer.
Yeah. Yeah.
So teachers are either 12 or 10 month employees. So when I get a teacher, I'm like, hey, are you paid 10 or 12 months? And then just go right off that. Generally, too, a lot of them will have part-time jobs over the summer.
Yes.
And if usually a part-time job, we need 2 years continuance. Teachers is a little bit different. If we can prove that it's just a seasonal job and you do it every year, we're fine to use it. It's really easy for teachers to buy homes, and they do have, like South Carolina, for instance, has a program specifically for teachers to help you buy. But 10 month or 12 month is what it comes down to. If you don't work over the summer, you're fine. You don't have to work.
Now, do you have a lot of teachers, but do you have a lot of seasonal workers who try to purchase homes?
Sometimes. Usually the only time I really see it is with teachers, though. Like I'll get people with part-time jobs. That's always a tough one. Part-time has gotten really hard because it has to be completely interrupted for 2 years or we can't use it.
Yeah.
So that's the main one. If you're like I mean, if you have a seasonal job though, and we can prove it's seasonal, like I actually have a lady that works for a wedding. It's like a wedding company, and she's a bartender for a wedding venues. So it's just sporadic when she does it. But I've got like 2 years worth, and her employer gave me a letter that says she's a seasonal worker and she's been doing it for 2 years. So as long as we have something from your employer just stating that it's continuing, it's been happening, we're fine to use it.
Yeah. Yeah. Now going back to that VOE, the verification of employment, that can sometimes be sticky as well.
Yeah.
Because I know we've experienced one where I think you guys called them and then they failed to communicate back with you guys, but eventually there was some type of communication and it was like, oh yeah, we don't do these here.
Yeah.
You gotta
you
email.
go to a third party or something or another.
Yeah, man.
Yeah, they're tough.
Yeah.
So that's the big one. If I need to obtain something from your employer, I'm going to ask like, hey, what's a good number for your HR or payroll department?
Yes.
So that way I can call them and say, hey, I've got to send this over. Where do I need to send it to? Half the time they don't answer, and I have to keep calling and leaving messages or emailing. But I mean, eventually they'll get back to me.
Yeah.
So I usually will tell the client at that point, if I'm trying to call and can't get in touch with them, I'm like, hey, please call your employer and tell them to call me back because you need to buy a house.
Right. Now, where at in the home buying process do you actually get the verification of employment?
Honestly, I tend to get them up front. So as soon as you apply, if I look at your pay and I determine that it's not salary is the best way to put it, I'm gonna get a verification of employment right off the bat. So I try to get everything up front before it gets to the underwriter, because I want to submit my file to the underwriter. It goes straight to them They're going to review it, and they'll just come back to me and generally say like, hey, I need an appraisal, I need this, I need that. Like, I don't want like 15 conditions where I'm like chasing stuff. So it's a lot better for the client too, because up front, yes, it's a lot more work. You have to give me a ton of documents up front. But then during the process, you're not going to be bugged every week for like 10 new documents. It's, hey, I need you to sign this, or I need one bank statement, or something like that. I try to front load everything and get it all done up front. And then it's actually good for the client too, because there's a lot of lenders out there that do pre-qualifications. Yeah. Basically means they're just going to take your word for whatever you tell them.
Yeah. And then they come back
I'm not going to take your word.
Yeah.
I'm not, I'm sorry.
And that's good though. That's good. That's good. Man, like, then later on in the process, they just, I need this, I need this, I need this,
I mean, it's terrible too. I mean, for the client, like just, I'll get clients like where they're pre-qualified with someone else, and real estate agent freaking out calling me like, hey, this client just got denied. Like, what can you do? And then I'm trying to save it, and I've had some where I've literally just talked to the client on the phone and they've told me their situation. I'm like, there's no way you should have ever been approved. Yeah. I mean, how did you get approved? Right. It's really comes down to like who you work with too. I mean, I would definitely make sure that you're working with someone that's going to look out for your best interest and not try to put you into a home that you can't afford. I mean, or that you can't qualify for. Yeah. So
that's very important.
Yeah, it's tough. I mean, everybody does business differently.
So along with verification of employment, getting refinancing things in the middle of the closing process.
Yeah, refinancing things is not good.
Yeah, that's a big holdup. What else are some holdups you ever ran across?
Don't go buy like a boat or a car or a washer. I mean, there's anything that you go and buy, we're gonna find out. Is the best way to put it. If you open credit or anything, we're going to find out, because we order something through the credit bureaus right before you close to see if you've opened any new credit. I would say those are the biggest ones. Don't quit your job. Don't open new credit. Don't start refinancing things. Like if you apply and your loan officer tells you that your profile's good, just stick with it like that until you close. Don't make any major purchases, or don't quit your job is the biggest thing.
Don't even spend any money.
Yeah.
Honestly, wait. Wait until we close, then go and buy everything you like to buy. That's very smart counsel.
That's the biggest part. Those are the two biggest things: is people just opening new credit and it shoots their debt to income up, or people quitting their jobs. Yeah. So
now that's different. Is that different from investors who may be using a DSCR loan?
Yeah, so for investors, DSCR loan, we don't really care what's on your credit report, because we're just going based off the cash flow for the property. So as long as you have enough assets to close and your credit's good and that rent schedule comes in, we don't care. We'll close the loan. So they're not traditional mortgages, so we don't have to follow like traditional guidelines on them. So they're a lot more lenient than just like your FHA, VA, USDA conventional.
Yeah. Now, would you tell somebody who is not in position to buy a house to go with a DSCR loan?
I mean, I wouldn't. I guess the best way to put it is if they want to use it, I would present the option to them, and I would say, here's what you can do if you would like to do this. I mean, like I said before, it's not my loan. Yeah. So like I've been in scenarios where when I worked in a call center doing refinances, and there's like, I've got multiple options that I send over to a client, for example, like 3 different scenarios. Like, hey, here's option 1, here's option 2, here's option 3. Well, I think option 3 is the best. I do. And then I'm going over it with a client, and they're like, no, I want option 1. I'm like, okay, that's fine. We're going to go with this one.
Option 1.
Yeah, like whatever you did, it's not my loans. That's how I look at it, really is. I mean, if it makes sense to you, you're going to tell me, and it's not up to me to determine if it makes sense to you or not. Yeah. So I let clients, I let them make their own decision. If you want to do it, do it.
Yeah.
I'll try to educate you as best I can, but whatever I say, you might think different.
Yeah, and I tell you what, man, I've worked with some really good people. I've also worked with some very stubborn people.
Yeah. Oh yeah. Extremely.
They can make it a little tough sometimes.
Yeah, I just had one.
And I tell you what, man. A lot of the clients that kind of give you a little bit run for your money. There's one thing that I find in common between all of them. Yeah. They're all still good people, but they just give you a little bit more run for your money. Okay, they do not read carefully.
Yeah. No,
they do not read carefully, and so they see this letter. They call me upset, and it's like, okay, hold on, that's not what that's saying. Reread it.
Mm-hmm.
Okay, and I'll tell you now, I have some clients now, man, and we finished the selling process of the home, and there were some things that were supposed to be happening, but people don't understand that it's a team effort, right? So I'm your realtor. I help you negotiate the deals. I help the opportunity get to where it needs to go. Okay, but I'm not an attorney, so I cannot give you legal advice. Like, I can tell you legally what you can and what you can't do based on the law, but I'm not an attorney, so I'm not gonna go to court for you, and I'm not gonna stand in front of the judge, and I'm not gonna represent you in that manner, right? And so, but a lot of people don't realize that. Like, okay, you just do mortgages.
Yeah.
I just sell real estate.
Yep.
We having a special attorneys for these things.
Yeah.
I can show you where these attorneys are, and I can show you how to get to them, and I can help you have the conversation.
Oh yeah.
But I cannot go in court and say, hey, my clients, I just can't do that.
Can't do it, no.
And I think that comes with us not reading.
Yeah, that's a lot of it. Yeah.
I run into that a lot.
Because I'll get people, for instance. I have a client right now that's approved, and she's using down payment assistance to buy a manufactured home, like a double wide.
Yeah.
So in order to buy a double wide with down payment assistance, it has to be brand new, never occupied.
Yes.
So I've texted her this. I've emailed her this. I have it in the text thread, like 3 texts above, where she just sent me a double wide built in 1995 and asked me if it would work. And I'm like, you're out here, like, this is a real estate agent. So she's out here now wasting her client's time and my time because she can't read the one part that says it has to be a new, never occupied home.
Never.
And so sometimes that happens.
Yeah, it sucks. But you know what? Agents who are moving very quick, and they are only focused on, I just need to close this deal.
That's the thing. Yeah.
That's what happens. Mm-hmm. Sometimes you have to just slow it down.
Some of them are desperate. They're like, this is my only deal, my only client.
Yeah.
And they try and do everything that they possibly can, and like sometimes you can't do that.
Yeah. With specific loans, you just can't. Yeah. You just can't. There's some other things that will hold up a down payment assistance as well. I think we ran across one where he was able to receive assistance, but
he couldn't get the whole thing.
He couldn't get the whole thing because of his overtime.
Yeah,
right?
So it's weird. Like, I guess the best way to put it is how we determine income versus how they determine income.
Yes.
We have to determine your income. It's just, over time speaking, we have to average it over 2 years.
Correct.
So I've got to take a 2-year average. If it's declining, I have to go off the decline. They don't look at their income like that. So when he sent them his new pay stub, it had like way more overtime on it. So they literally just take the amount that's on that pay stub and they multiply it out by X amount of weeks, and that's the income they give you even if you don't earn it.
Wow.
So that's what happened with him. It then pushed him over by, it wasn't even a lot either. It was like $1,500.
Yeah.
That it pushed him over. And when that happens, unfortunately, there's nothing. I can't argue with them.
Yeah.
Like I can try. I tried to. I sent them like 10 things and they were just like, no. This is what it is. We're sorry. So it sucked.
Yeah.
I mean, we still able to do it. He still got $9,000 or something.
Yeah, just not the whole 15.
He just couldn't get the whole 15.
Right.
So
and we were banking on that 15.
Yeah, we're banking on it.
But it was good though because I had seller concessions come in, and that was that extra piece of the pie.
I think he only had to come up with like $2,000 or something.
Yeah,
which wasn't bad.
Not at all.
But I mean, sometimes stuff can happen. Like stuff can pop up like that. It's generally going to happen when you're using agencies like that. Like we're going through a second party, so then it's got to be done by us and by them.
Yes.
So sometimes that happens.
Yeah.
That's actually the only time I've ever had that happen too.
Wow.
Yeah.
Really? Yeah. So I think that put them over $100K, right?
Yeah, right over
put them
100.
Over $100K.
Yeah.
So essentially, if you're going to use down payment assistance, you got to make less than $100K.
Yep. For the most part.
So you can get the full benefit of it.
Yeah.
And don't refinance or don't sell, don't do anything for at least 7 years.
Yeah, it's the big one.
Yeah. All right, so I'm gonna switch the segment, man. I took a poll. I got some questions.
Nice.
And I'm gonna ask you.
All right.
Let's just run through it, man. Some of this stuff is crazy. Okay.
What you got?
All right. Do mortgage lenders have nightmares about missing W-2s?
Oh gosh. I mean, I don't know about nightmares, but like I have definitely stayed up at night before and not been able to sleep over loans. So
oh my god.
Sometimes it's very stressful. It can be very stressful. I mean,
Yes.
you got a lot of stuff on the line. It's a lot of moving parts, and
Yes.
yeah, I've had nights before where I'm like, oh my gosh, is this gonna close? Is this gonna close? I need this document. I need this document. Please send me this document.
Yes.
So, yeah, I mean, not a W-2, but
Yeah.
I've been waiting for stuff before like that.
Why is it taking so long?
Yeah.
Send me the document. Stop what you're doing.
And it's like I get one, and then I need like all pages of stuff.
Yeah.
So they're like, oh, well, I sent it. It's like, yeah, you sent one of 6. I need 1, 2, 3, 4, 5, 6.
Yes.
So it's just tough. It's
yes.
tough.
Yes. All right. So be honest. Do lenders have a sixth sense for knowing when somebody just bought a car before closing?
I mean, there's kind of a way to tell, yeah. We can look at your credit report and see how many payments you had on your car payment, or if you had a lease and when it expired. So yeah, usually I'm like, oh, this car was just paid off. Oh, they probably, or this lease just ran out.
Yeah,
got another lease.
Right. Check this one out. If I Venmo you my down payment, does that make it official?
No. I never want to see it.
Are you serious? Are you serious? Okay.
I want to see the funds in your bank account, but I don't want to see them anywhere else.
If it comes from Venmo, just make sure it's in your bank account.
Yep. Hey, we can source them from Venmo.
Yeah.
We just have to find out who sent them to you.
Mm-hmm. All right. How many cups of coffee does it take to close one loan?
I just drink 2 cups in the morning, so
that's it.
That's it.
That's it.
2 cups of coffee.
That's good.
I like bourbon though.
Yeah. It's needed. What's the most creative reason someone's giving for a bad credit score?
Oh, I had a lady that told me that what was it? It was like a prince in Africa. This was like 6 months ago. She was sending him a bunch of money. It was an older lady. I felt really bad for her. They scammed her out of all her money, and her credit was like a 400. Yeah, it was insane. And her kid was trying to get her to move down to Raleigh so that way she couldn't be scammed anymore. But she's like fully convinced that she's like dating this African prince. And I mean, she had me on the phone, I'm not even kidding, for like 45 minutes just talking to me about this guy. And eventually I was like, all right, ma'am, I have to hang up. I got stuff to do, sorry.
Wow.
Yeah, so they completely ruined her credit. I think they stole her identity, and she had no idea of it. And her kids are trying to help her, but they couldn't.
Wow.
That's the worst one I've seen.
Wow. That's pretty crazy.
Yeah, it was pretty bad.
All right. If lenders were superheroes, would their power be a document control or debt ratio vision?
Ooh, I'm going to go with debt ratio vision. That'd be way easier. Then I don't have to look at income documents.
Yeah. That's a lot.
Yeah.
So explain to me, when you're looking at a debt to income like ratio, when you're trying to determine, you don't just upload it to a system and it tells you. You actually analyze the numbers and pay stubs and you look at their credit score?
So we have a system that will spit out the ratio, but the best way to put it, we're going to have to pull your credit in. So everything that's on your credit report, all your minimum payments each month, car payments, minimum credit card payments, anything like that's going to be pulled over into your liabilities. Then we're going to put in the new mortgage payment for the new house. That's also going to be included in there.
Yes.
Also, I'm going to get your pay stubs. Depending on how you're paid, depends on how I have to calculate your income.
Yes.
So then I have to go in and I have to look at the pay stubs, W-2s, or self-employed taxes to come up with an income calculation. I have to basically take the formula of my income calculation, and then I put that in the file and like copy it for the underwriter. And so that way they can see like, hey, this is how I came up with my income. That's the honestly, like if you're a loan officer, the biggest thing is like, how do we present this information with the least amount of questions?
Yes.
So you just have to learn how to like paint a really, really good picture for the underwriter, and your loans will go through a lot smoother if you tell them what's happening.
Just be upfront. Just be completely honest.
But the income's a big one.
Yeah, I've seen. You remember we were doing that loan, and they were trying to borrow a substantial amount of money. Mm-hmm. Now, don't get me wrong; they had quite a bit of money for a down payment.
Yeah.
But it was like, well, hold on, you have 9 mortgage late payments.
Mm-hmm.
Like nobody's gonna lend.
No.
Based on these are too recent.
Yeah.
These things affected you.
That's the thing too. People don't really think about that. Like if you have late mortgage payments, they obviously we're going to look at that and we're going to say, hey, you've made late mortgage payments in the last 12 months. Like what your ability to repay this is probably pretty low because you're not able to pay the one right now.
Yeah.
So what they'll do is they'll literally make you wait 12 months out from those late payments.
Just so it resets.
And so you got to make those current payments again. And then hopefully you can be able to buy then.
Have you ever dealt with somebody who has foreclosed on you?
Yeah. Like
explain that process, because you have to foreclosures. I mean, you have to not make a mortgage payment for almost 4 months.
Yeah, you got to be over 120 days late.
Yeah.
So I had a client call me, this was a few years ago, and she had gotten a letter that said that she was being foreclosed on, and she was freaking out and didn't know what to do. Her ex-husband and her actually, they got divorced. They were separated. He was supposed to make the payment. Didn't make the payment. So she got stuck with it.
Wow.
They kicked her out. I told her, I said, try calling them and seeing if you can work with them. Just ask them if there's, any type of loan modification or if you can start paying them now. But I think hers was just too far gone that they wouldn't let her do it. But generally, if you are having a home foreclosed on, if you call your servicer, they will work with you. Unless it's her situation, I think, was just a little different. It was too far gone from the sound of it. I don't think she could actually afford the house either.
That's the thing.
So that's a big one too. If they look at it and they're like, hey, you can't, your debt to income doesn't work for this house because her husband was the one paying for it. That's probably why they kicked her out. It does. You got to be 120 days late to get it foreclosed on. But I've seen numerous times where people have been able to get it modified. So they'll basically, just easy numbers, say they had a $400,000 loan. They'll take 300,000 of it and they're like, you'll pay us on 300 and then we're going to put 100 of it over here.
Right.
You're not going to pay us on, but it's going to accrue interest.
So I'm not going to call it forbearance.
It's kind of like that.
Okay.
Yeah, kind of like forbearance was when they were doing the forbearance programs, because the forbearance just kind of sat over there and accrued interest too if you didn't want to pay it.
Yeah.
It's kind of the same way.
Yeah, and I think they didn't accrue interest when you did during COVID.
Yeah, if you did it during COVID. Yeah.
Yeah, they just added it to the back end.
Yeah.
It shows up as a second position lien.
Yeah, second lien on there.
I actually just sold a house and that happened.
I've had a couple where we go to we see them on the financing.
Oh, let me read this one. Why does it feel like lenders want to know everything about me except my favorite color?
We basically do. I tell everybody that. I'm like, I need everything except your firstborn child's name.
Yes.
We have to do a whole deep dive into your finances. We need everything, unfortunately. That's my job is what crashed the whole housing market in 2008. So they put all these laws into place so that can't happen again, because they were handing out money to people that could not afford to pay it back. And then you had too many people default on loans, and that crashed the economy.
Yes.
Unfortunately.
Yes. It happens, man.
It happens, yeah. But we shouldn't see something like that again just because they've got lending standards put into place now. But
all right. So, do you service your loans in-house or sell them to another company?
We do not service loans. So we shop probably about 25, 30 different investors. When I run pricing, I press best available. It pulls over the best rate from every rate sheet that I have.
Yes.
And then once the loan is closed, I then generally a week after it's closed or so, I get an email from a servicer and they're like, hey, it's going to Chase, PennyMac, US. It's all major servicers that we use. We just shop them. So I mean, it just gives you the ability to basically shop around without calling 30 different people.
Right. Now, how do they get in contact with the buyer in regards to that?
Oh yeah, so with that, once your loan gets sold, I tell everyone, hey, as soon as you close, I'll call you as soon as I get it and tell you where it's going. But they also send a mailer straight to your house that shows up within 15 days after it's sold. The mailer comes.
Wow.
And that tells you right there, hey, here's how you go online, set up online payments. Here's your new servicer. We're going to be making the payment. Yeah. It's honestly all it is just we're selling the rights to service the loan.
Yes.
Like they can't change your loan. They can't change your interest rate or anything like that. It's just who you're making the payment to.
Have you ever had somebody in panic mode call you because...
try and find out who it goes to or something.
Yeah.
I've had people like panic call me because they like couldn't get in touch with them. Yeah. So I'm like, hey, like let me pull up their phone number because I have all their information. They send it all over to me too. Right. But usually like I've never had anyone call like freaking out trying to figure out where like, hey, my payment's gonna be late and I still haven't gotten this yet. Usually they're just like confused and don't know how to set it up or something. Or they're calling me and they're like, hey, is this legitimate? Because after you close on a house, you get 100 mailers.
Oh yeah.
So there's tons of stuff that comes.
Yeah.
So that's usually what it is. They'll just call me to make sure that it's actually legit. But I call everybody. So as soon as I get that, I'm like, hey, Mr. blah, 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 your loan's going to here. You should see this coming in the mail. So they already are aware that it's coming. Right. And I'm like, look for this. Anything else, throw it away.
Right.
So.
That's good. That's good, man. All right. What advice do you have for someone trying to improve their approval odds?
I would say the easiest one would be I would sign up for Experian Boost, number one. It's free, doesn't cost you any money. And it's going to pull in like any recurring monthly payments you have on your credit report, and it'll backtrack them too. So like it'll go back like 12 months. It pulls in like utility bills, phone bills. I've seen Spotify on there, like any recurring payments, and it'll just add it to your credit. Another one is if it's credit wise that you're trying to improve, being added on as an authorized user onto somebody else's card, that can always allow you to use their credit to boost yours up. Yeah. So if they have good credit, you could say like, hey, mom or whatever, add me on as an authorized user. It wouldn't do anything. It doesn't hurt them at all. They literally just add you on and it allows you to use their credit to boost yours up. Yeah, benefits. Yeah, which is nice. And then the other one would be I would try to... The biggest reason that I see why people's credit is low is because of their high balances on credit cards. So if you have credit card usage generally over 30% of whatever the limit is, so like if the easy number is $1,000 and your limit on there is you have more than $300 charged on it, that's negatively affecting your credit every month. Right. So I would say easiest way, look at whatever your lowest balance is on your credit card with the highest payment and pay that one off first. And then just keep doing it like that. Yeah. Lowest balance, highest payment. And then that'll allow you to save more money and pay more off in a month. If it's something with income, that's generally you'd have to get a new job, unfortunately.
Yeah, get a second job.
Get a second job, get a new job, earn more money. But the main one that I see is it's usually credit. Yeah. It's not usually income.
Now, let me ask you this in regards to that. Now, let's say someone has this 6 months plan, right? And they complete their plan. They get their credit card balances back in position where they need to be. Their credit score goes up. After that very credit report, how soon after should they call you? Or does the underwriters typically look for 2 or 3 months of consistent credit card usage, or should they immediately, as soon as it happens and the score goes up, should they immediately contact you, or should they give it another 30 to 90 days?
I would say I would call whoever your creditor is and ask them when they report over to the credit bureaus. Correct. Because sometimes you can see they can take 60 days to report. Yep. They say 30, but I've seen it before where someone's my credit went up and it didn't because they didn't report it back over yet. Right. And we had to keep waiting another 30 days. So the easiest way I'd probably just safe bet, wait a month after you do it. Or if you call the creditor and they're like, hey, we're reporting it over on November 6th, I can pull on the 7th and we'll be fine. But we would just have to know what date they're going to report that back over to the Bureau.
Yeah. Yeah. That's actually very frustrating too.
It is.
Because they're like so eager to buy this house and they found that one.
Yeah.
But for me at least, I don't put in offers unless we're like 100% ready to go, because there's nothing else more discouraging than putting in an offer, getting it accepted, and then having to go back and do all the paperwork. You got to go back and do this, and now that's discouraging for the other party too, because
definitely,
they want to sell and get rid of this. They're looking to make some money, so if
and
you're not
on top of that too, I mean, if their credit is not where it should be and they put in an offer, and let's just say they go under contract. Yeah. Well, let's say it should have boosted it up, but it doesn't. Yeah. All right. Well, now they don't qualify. Now they put money up, and there's a chance too that, let's say you boost your score up, and you still might not qualify. Right. Like your credit profile, it could just not like your credit profile. Yeah. So I try to tell everybody, like, I would never let them go under contract unless like their credit was high enough and I had it approved eligible. Yeah. I have had people that have fixed like mid-process. I had a guy a few months ago that boosted his credit up by like 90 points. He was like, hey, what do I need to do? He had a bunch of money, and he's like, what do I need to do to boost my score up? And I was like, I can get you up to like 740 and you'll get way better pricing. So interest rates, the higher your credit and the larger down payment, the better your interest rate is. Yes. So he boosted his credit up from like low 600s to high 740s, and we dropped his rate like, I think it was over like 0.5% just from him boosting his score up that much. Yeah. And he was extremely happy. I was happy. He saved money. So I mean, it was a win-win for everyone. So you can still do it mid-process, but I just wouldn't advise if your score is not high enough to purchase to go under contract. Yes, correct. That's the only thing.
Truth be told, I won't even consult my clients to even put in an offer. Yeah. We're going to wait until we know that this is where we need to be before we move forward, because then that helps everything else. Because I think sometimes, like, I could tell my client, like, hey, listen, this is going to take 30 days to close this loan. Yeah. For us, that's not a long time. But for them, they think it's forever. It's like, no. When they say offer accepted, you have to be ready to get that due diligence fee tomorrow. You have to have your ducks in a row. Don't go out and finance anything. Like, you have to, like,
everything starts rolling.
if anything, you should be like finishing packing. You know what I mean? You should be decluttering. You should be doing all of those other things, because we're handling everything else. You know what I mean? So I don't advise anybody to move forward, and I think that's what happened with. Actually, one of the clients we was working with, and she was sold on that house.
Oh, yeah. She just, like, really, really wanted to.
She really wanted it. And I was like, listen, I really want this house for you. Yeah. But until we hear back from Clay,
it doesn't work.
That this is what it needs to be and this is what it is not. We're not even going to waste any time jumping in that ring.
And it sucks, too, because, like, if you start looking at houses, so let's just say $400,000, and then you come to me and you can only qualify for $250. Like, what are you gonna do now?
That kills.
Yeah, you're not gonna buy anything.
You're not gonna want to. No, because everything you just sold simultaneously on $400,000.
So the easiest thing is, like, I always try to tell people, like, figure out what you can afford and what a comfortable payment is, and then start shopping for houses. Yes. So at least you know what you're looking for.
Right, and that actually that leads me into the next question. Is it true that you can shop interest rates? And if you can, how do you go about it?
Yeah, so I can shop interest rates. Like I said, I can shop like 25 different investors. Mine's just by pressing best available. And then if we're using all those like weird niche DSCR and stuff, we just kind of pit investors against each other. So we're like, hey, these are the terms this one gave us. Like, can you beat this? And sometimes they can, sometimes they can't. If shopping lenders, though, let's say, if you want to shop lenders and see if someone else has lower rates or whatever, best time to do it is the day you go under contract. Rates change all day, every day, just like the stock market. So like I can give you a rate Friday at like 10 o'clock in the morning, and then I can give you another rate at like 2 in the afternoon, and they're going to be different. Yeah. So if you want to compare apples to apples, try to do them all at the same day at the same time. Yes. It's the easiest way to do it. So like I could be the lowest rate today, I might not be tomorrow.
Right.
It's just day by day.
Right. So check this one out. What happens if rates drop after I lock, and do you offer a float down option?
Yeah, so we do, but they have to drop by like 0.5%. So they would have to drop pretty drastically for you to be able to float down. I tell everybody when they go under contract, once we're 30 days out, sometimes 45 days, I'm like, hey, here's 45 days out if they're under contract and it's 45-day close. Here's what rates look like. I probably wouldn't lock it 45 days out.
Right.
Well, depending on what the market's doing. I mean, if I saw the market was like going up, I'd say, hey, lock this thing now.
Yeah. Now, does the flow down option involve them bringing you more money?
No.
Or what is it?
It's just if it drops by like 0.5%, we'll relock at market.
Right.
But best way to put it, once we lock a rate, like we pay to lock rates.
Yes.
So it costs us money, so we can't unlock them.
Right.
Is the best way to put it. And we don't service any loans, so they're not our loans. They're all investors. So unfortunately, that's kind of why our policy is the way it is.
Right.
But I usually don't. I mean, you might see it if it drops. Like I've seen it drop like 1/8 of a point.
Yeah.
Which is, you're talking like $16. I mean, so it's you're not going to see drastic change within that 30 days mark usually.
Yeah.
Unless we go to war. I mean, it's probably the only time.
Right.
Like when the Ukraine war started over there a couple years ago, I had a client that I kept telling to lock, and he was like, no, rates are going to go down. And I was like, I don't know what makes you think that, because every day they're going up. And he's like, well, we're about to go to war. I literally told this guy, I said, listen, if you call me back next week and your rate's a 7.25, don't be mad at me.
Yeah.
He called me back next week on Tuesday when the war started, and he was like, where are rates? And I was like, we're at a 7.25.
Yeah.
He's like, are you kidding me? Lock it. So I do this. Like, I don't know. I might listen to someone that does this. I don't know. Like, I listen to experts. I'm not an expert at anything. But if I'm not good at something and someone gives me advice, I usually try to listen to them.
Yeah. Right. All right. Last question, man. How do you stand out from other lenders?
Oh, I mean, I'd say probably the biggest thing that I try to do is like communication wise.
Yes.
I mean, I'm always available. Like I have my phone on me. You call me, text me, call me on the weekend, night, whatever. And then I try to be really quick. Like I'm very efficient with my time. I try and get everything done in a timely fashion. And like, I guess the best way to put it is like, I want you to get pre-approved. I want it to be an easy process. I want to understand what your goals are.
Yes.
And then I basically just want to tailor the loan around you to get you what you need.
Yeah.
And I'm here along the way too, communicating with you and staying in touch. It's a big thing.
Yeah, it is. It is. Your memory bank's full, isn't it?
Yeah.
Yeah, mine's too. I got to the point where I'd start writing everything. I write everything. I can't.
I got a notebook in there.
Yeah. I got one in the car. I don't listen, I literally drive and I can't.
Yeah. I mean, someone calls me, like, I'll get a call, I'll write their name on the top, and then I'll just start jotting stuff down underneath it. Like,
yeah. Well, guys, that concludes our interview, man. The man, the myth, the legend himself, Clay Holk. Let's get you a loan.
Oh yeah, let me know. Thank you.
All right. Thank you, man.
Oh yeah.